Hi, my name is Dylan Brown, the host of Coffee Flavored Crypto. This is where you can get the latest news, project reviews, and coffee crypto trading entertainment, edutainment, whatever you want to call it. Learn about different altcoins, historical Bitcoin cycles, and get the latest in everything crypto. Follow us on our other social media, specifically our Twitter page. That is C_F_crypto. Again, C_F_crypto. Keep watching. I got more for you. And all right, guys, we're going to jump right in and get right to it. Title of this video: what will happen to Sam Bankman Fried, FTX, and the crypto market at large? Crypto is crumbling, they said. Let's look here. And I kind of want to preface this. I already predicted this. They're making it smaller than what it actually is. This man lost billions of dollars in other people's money. That's something that is not to make light of. And as you can see, I think they're trying to give them an out by calling them kids, a gang of kids in the Bahamas. Like, what does that even mean? This is a grown man who made a decision to hypothecate with other people's funds and lost their money. This is no different than any other Bernie Madoff or the banks in 2008 with Lehman Brothers, and that's what we're looking at in this situation. Just a complete mishandling of other people's funds, and it gets away. It actually shines a light on what crypto is actually supposed to be about, which is peer-to-peer, not going through a centralized exchange and holding your cryptocurrency on there. It defeats the purpose of what cryptocurrencies were created to do, which is to be bankless, to be self-sovereign, things along those lines. So we're going to get right into this. Shocking is the word that aptly describes the rapid fall of Sam Bankman-Fried's cryptocurrency empire. To a surprising degree, it's a sentiment that pours out from people who worked for him, people who you'd think would have a clue, right? And so we scroll down, and they go into, and they start talking about, they start talking about certain other people that came into play. Many former coworkers from quantitative trading firm Jane Street, others he met at Massachusetts Institute of Technology, his alma mater. All 10 are or used to be paired up in a romantic relationship with each other. Interesting. That includes Alameda CEO Carolina Ellison, whose firm played a central role in the company's collapse and who at times has dated Bankman Fried. Not really important stuff. I think they're getting off the point. I think the point is we need to hold certain people accountable. And, there's some negligence going on here. Too many people are tied into traditional finance. And honestly, he kind of ran it like the banks in the past where prior to 2008, before a lot of more financial regulatory came into about with these banks. So it's a bad situation. I kind of want to point out more things outside of this. We could talk about not your keys, not your crypto. So I want to hop over here and try to give a solution to the problem that was present. You do not need a centralized exchange to hold your funds. You can use them to onboard, as I do at times. I have a Coinbase account. I have a crypto.com account. I didn't have an FTX, thank God. But, I don't hold my assets on a centralized exchange. I would recommend people hold it in a cold storage wallet, and I would recommend people hold it in at the worst MetaMask wallet or a hot wallet. MetaMask is a type of hot wallet, just to give everybody frame of reference. So we're looking at Ledger Nano X. So we'll go to products. We want to go to Ledger Nano X, and I have one here today. So I want you guys to look at my screen real quick. I'll switch over and make myself bigger. Right. So right here, we're looking at a Ledger Nano X, as you can see here. My nails will be shown. They're dirty, but boom, clean. Got the ledger. Boom. Do not buy this anywhere else other than the ledger.com that I'm showing right here. This is, people can put malware if you buy it from an Amazon or what have you. So I'm not getting paid for this, but I just want you guys to know there's options other than what holding it on your cryptocurrencies, holding it on a centralized exchange like an FTX or a Coinbase or a crypto.com. I think they're people are going to use them. People are not going to want to go through the hassle of buying a cold storage wallet until it hurts them. This is not something new. This is a Mt. Gox situation. And it happens. We've seen it with 3AC. We've seen it happen with, I believe, Quantera. I forget the name of it, but this is something that can happen. It doesn't take much to launch a cryptocurrency too, and what FTX did, their FTT token, they were just hypothecating that it was worth more than it actually was, and this was what it made people think, oh, they have the money to, cover these large losses, but apparently and obviously not. They're going under. They're bad microeconomics there, bad macroeconomics as well. They have to be some of the worst traders. Shout out to Nancy Pelosi. She should have given him some help there, but it is what it is. But let's not harp on the problem. Let's get on the solution. So see here, you're looking at a Ledger Nano X, and the Ledger Nano X is also a part of what they call just a standard that, if you can see my screen still, they're part of a standard. I'll start from the top. So it's called BIP39, BIP39 wallet. So Ledger is a part of a standard that supports hardware and software wallets, basically coming up with a mnemonic recovery seed phrase. The Ledger has a 24-word seed phrase, and certain other ones, other standards and protocols or proposals, so have 12-word seed phrases. So Ledger has 24-word seed phrase, and this is a seed phrase or recovery phrase that allows you to access your cryptocurrency from this small device. Let's scroll down here and we'll get to the list. And there's other types of standards, BIP32, and then also BIP44. But Ledger is a BIP39 wallet, and it's very easy, guys. I think people get intimidated by the something new, like and having all their crypto on something like this. But as you can see here, if I were to let's ask some questions. Dylan, what if you lose your Ledger wallet? Well, no one has your seed phrase, so they can't access it. And what you could do is buy a new Ledger or one of these that supports the BIP 32, 39, and 44. And you are able to access, you use the seed phrase, you write it down, you keep it with you, and this is basically your access to any Ledger. And you can access your cryptocurrency again. And again, another question to ask, what if Ledger goes out of business? Okay, so as you can see from these hardware wallets, I would stick with hardware wallets, are the most secure. But as you can see, if you lose or Ledger were to go out of business, you would go and get a Trezor wallet, or want to Keep Key or Big Box or one of these other type of hardware wallet, BIP39 wallets. And you can scroll down. There's also software wallets. They're okay. MetaMask. While I try to stray away from anything on a mobile wallet, because then you're under iOS or Android's restrictions, and then web wallets as well. So you have these And certain wallets are better for different crypto, and you want to try to get certain currency coins. And there's risk involved in this. Crypto's volatile and it's a new market. I think people got to get used to the volatility in the new market, and as time goes on, you'll see this mature, and you won't see the volatility as it works to the downside works to the upside. So if you're good at trading, or not even trading, I would call myself a swing to long term holder. So I wouldn't even call myself a trader. So these right here is something key in on. I think the main takeaway from this, guys, don't hold your crypto on FTX or any other centralized exchange. It's not what crypto was made for. And you have options. You have Ledger, you have Trezor, and several other options here that will allow you to secure your cryptocurrency and keep your keys self-custody, self-sovereignty. I understand this is coming from the reason why libertarians were drawn to this is for those reasons. So keep that in mind when you're doing crypto. Don't be greedy, and don't be lazy. There's a laziness to keeping your crypto on, or ignorance, I guess, if you don't know. But if you know and these functionalities exist, and these options exist, why not use them? It's a YouTube video away from learning how to set it up. I have some technical capability, but I'm not any whiz kid. I'm not Albert Einstein. I'm not Elon Musk. But if you can watch a video and understand it, and it takes 5 minutes to set up, really, and it's easy enough, guys. Easy enough. Just simple concepts, not your keys, not your crypto, and cold storage wallets. These are things to take away and Google and deep dive. If you are gonna put money away and these are your resources or life savings, some people lost their savings, and why not secure it? Why not? All right, guys. I don't want to keep you up too long or keep you guys, waiting too long. But that is the main takeaway from what I got from the FTX situation. Is a lot of people are not understanding the technology that crypto is, or cryptocurrency is, and the market is. I think more people should take the time to not just, I'm trying to make money and this is treating it like the stock market. No, this is something a little different. So you have to approach it a little differently. There's more tech involved, and you should learn about what you're buying. Why are you holding an FTT token? I'm sure some people are like, oh, maybe it go up, it will go down. I use the exchange already. Why not buy the coin? And it really is not backed by anything. There's no technology in there, and it's not backed by anything tangible. There's cryptocurrency currencies out there that are actually building real solid projects, and something that's actually helping in the real world. And blockchain and distributed ledger technology has its use cases, and we just need more. This is an infancy of cryptocurrency, and people talk about Web3. What is it? Well, Web3 was about peer-to-peer. It was about self-sovereignty. It was about banklessness. And it was about being your own bank and being able to exchange value quickly from internet connection. Like, I think people overcomplicate it. So I'll leave you guys with that. Not your keys, not your crypto. Look at other options, guys, and get into the technology if you are going to buy into crypto. Don't just be ignorant in the space and be, resist the slave mind, as they say. I'll see you guys later. Coffee Liver Crypto out.